We talk about the wealth effect, which is basically the idea that when stocks are rising and people feel richer, they feel better about going out and spending.
Uh-oh.
The last 2 months, the opposite has happened. Do you think that that decline in the wealth effect or reversal is going to have any effect on what's going on at stores this way? Liz, you go first.
I don't think it'll have an impact on holiday. While 50% of households own stocks, the majority are not looking at their portfolios daily, as disappointing as that might be. And so I think there is a lagged effect, and people tend to think about some of these disruptions as temporary until they start to see their statements.
So implicit in what she says there, Charlie, is the idea that far more important are two things. Unemployment is very low, job security, the sense that I'm not going to lose my job, is there, and wages are going up.
Absolutely right. And when you look at the impact that's having on the lower end consumer, it's very favorable. The lower end consumer drives a lot of holiday spending in our view. Families really plan for Christmas. There's always a Christmas. We've had years where there's been disaster, the recession, et cetera. And holiday spending has a tendency to hold up pretty well at the low end. The upper end is a different animal, where you've got the aspirational high-end shopper that may be feeling the pinch now and say, you know what, maybe I'm going to contract a little bit this year, and I'm not going to spend what I thought I would go.
That was just after Saks told, they had a pretty nice quarter, right? There's 7% comps. I mean, not that that tells you everything you need to know, but so much back and forth we've had over, the high end and the impact of losing the Chinese consumer. So what do you guys think is going on overall? Overall, is the U.S. consumer still in very good shape, Charlie?
I think so. I really do. Tyler's points. Unemployment's low. Wages are going up. Amazon, $15 minimum wage. Walmart, Target have done the same thing. There are a lot of tailwinds factoring into retail right now. We've had a really good year for retail. Some of the stock prices haven't behaved that way, but I'm a fixed income guy. I like operating income. We're seeing some pretty significant operating income growth this year amongst a good set of retailers.
Liz, who's got Mo and who doesn't have momentum?
I mean, the momentum is quite broad. So, I think some of the numbers that we saw out of reporting season, Target, TJX, Ulta, these stocks didn't perform, right? But the sales numbers were quite strong. I think there's a lot of concern out there about flow through, and the model has changed. If you are selling in an online environment, the flow through, earnings flow through.
Oh, I see. Yeah.
So sales were strong, earnings maybe not quite as strong as people had anticipated, or the flow through on strong sales weren't quite as high. But the model has changed because when you have an e-commerce business, it doesn't leverage. It doesn't leverage your store expense. There are direct expenses that tie back to that are quite high, and so there will be a margin dynamic that continues to play out. But to Charlie's point, a dollar at the low end, a dollar earned is a dollar spent, and that's not the case at the high end. The high end is not spending everything that they have. The low end absolutely is, and so when wages increase there, it really does impact retail.
Real quickly, Charlie, then get your favorite name here for people into Christmas.
Walmart. I've said it for many, many years. I think Walmart sets the tone for holiday spending in the U.S.
I still remember the Garth Brooks box set back in the day. That was, let me tell you, that was the best Walmart Christmas item of all time.